Hello, folks, and welcome to another edition of Satori Traders Precious Metal News. On the cover this week, we have Lion One Metals. We will jump right in and look at that chart. Key thing about this company, they have a large mineral deposit in the South Pacific. It's in Fiji, and geologically similar properties have yielded as much as 40 million ounces. Not uncommon to have 10 and 20 million ounce deposits in the region, alkaline system like this. And so unusual for a junior miner to have 100% control of a mineral deposit like this. And so it's exciting to see this company moving into production. Quentin Henney, the technical advisor for Lion One, did a interview this week, and he was sharing. He was talking about the recent drill results. So Lion One got some good drill results recently, and then Quentin was also talking about how Lion One will move into production in the next 2 years. And so the link for that interview is on the resource page of the newsletter this week. Let's jump right into the charts. Don't need that. Obviously, this is accumulation distribution. Investors they got bored and moved on. In the early stages of developing a mine, there are periods where it's not very interesting. You know, the company's doing work, they're getting permits, they're taking samples, they're waiting for surveys, and investors, they find a flashier story and move on. And so nothing really to talk about here in the chart other than, we've got this price channel. When the current up leg gets moving in force, I would expect to see Lion One head up and test the top of that channel again. Another good looking stock this week is Aloro Resources. They're developing a mineral deposit in Bolivia, and this is another Quentin Henney project. And the way he describes it, this is a unique deposit. Actually has attributes of several different types of geology that has happened in the past, and so the deposit has has about all the metals. So it's funny. I was listening to Quentin talk about it, and he says, yeah, it's got about half of the element table in it. But primarily silver. So Alora is an interesting company. They're expecting some drill results in the next few weeks, I believe. So obviously investors are interested in this company. Nice volume on that big move Friday. Accumulation distribution. Obviously this stock is under accumulation. MACD, full on bull mode. Buy signal and lots of energy. So let's go on to the gold chart. The daily chart of gold, I'm drawing this new modified shift fork this week, and I've got it. It's tentative, and so I want to see how price behaves in this fork for the next couple of trading sessions. And the key point from Andrew's pitchfork perspective is that I am intentionally ignoring this low point. See, normally when we were drawing a fork, we probably would do that. We'd probably use that as our as the pivot point for our fork. But I am intentionally ignoring that low. And if you aren't aware, so this low, that's Sunday night in the middle of Sunday night in Asian trading on the holiday weekend. MLK was Monday. And so in the middle of Sunday night on a holiday weekend, somebody decided it was a good time to dump billions of dollars worth of paper gold onto the market. And Anyway, so that's how we get a price bar like that. And that's why I believe that this is an appropriate fork and appropriate to ignore that that candlestick there. So, but gold's looking pretty good given recent action. Basically back at the point it's testing the top of this downtrending price channel. Not very exciting. There's not a lot of energy. Maybe there's some hinting at some bottoming going on. Once price breaks through this channel, 1915 or so will become our target up at the Forks median line. Let's keep moving. This is gold in the weekly time frame, and I've shared this idea. I think I showed it in a monthly chart. I'm suggesting that this A to B move, that's all happened in 2020, that gold made an impulsive price movement in 2020, and that when you have an impulsive price movement, you can accurately apply Fibonacci extension tool to find where price might run out of energy. And so in this case, we get a potential D target at 2388 based on the Fibonacci extension tool. We can get the same target in another manner, and that's by understanding that in charts, this is a bullish flag or pennant, and that it's this flags and pennants tend to mark the halfway point of price movements. And so that would be another suggestion that this A to B move is just the halfway, and that we're about to get a repeat of that A to B move once price breaks out of this continuation pattern. When I looked at this chart, it reminded me of something that Richard Russell said repeatedly, and that is that the primary trend cannot be manipulated. Central banks, governments, they can do what they want. They can push the markets around, and the whales can push the markets around. Can't change the primary trend. Primary trend in gold is up. We can see in this weekly chart, we've got it higher low, higher high, higher low, higher high. This is a series of higher lows and higher highs. That's the definition of an uptrend. Gold is in an uptrend, folks. Let's keep moving. So silver, same as gold. I'm drawing a new modified shift pitchfork this week. I'm intentionally ignoring this spike low. Sunday, middle of the night Sunday on a holiday weekend, somebody decided to dump a bunch of paper silver. As a technical analyst, I'm saying I'm going to ignore that low because it's not significant. It's extraneous, basically. We could talk about painting the charts, but that's another conversation we can have a different day. The action in the big ETFs, GDX and GDXJ, has gotten kind of choppy as gold has chopped around. So not really surprising. Potentially got a double or triple bottom going on here, which is could be considered bullish. The key point to notice, whether you're looking at GDX or GDXJ like we have here, this bottoming action is occurring above the November low. So we got this low in November. We started out on a new uptrend at this level of steepness. Now with the recent action, we still have an uptrend, but it has become more gentle. Key point is that we still have a higher low as part of our new uptrend. Sil looks a little bit better, actually looks a lot better. We've got price in Sil currently, it's the same bottoming action, but it's occurring above the 200-day moving average. And it's also occurring along the upper channel line. It's occurring along the top of this downtrending channel. And so we got the break above this channel in mid-December, and now we've got a price pulling back and testing the breakout level. And of course, my assumption, my bullish bias is that we're going to get some bottoming, and then we're going to continue with the up leg. And again, there's our low in November, and we're currently putting in a higher low. So let's keep rolling. U.S. dollar, so last week, pretty much what we expected is that we'd get at least get a test of the Forks median line, and at least a touch on the 50. Being that close to the 50, it'd be surprising not to see at least a spike up. And of course, that's what we got. But then the dollar rolled over, and so now it's kind of a wait and see what comes next for the dollar. There's a lot going on geopolitically. We've got Janet Yellen taking the reins as the new Treasury Secretary. We've got a new president who's signing executive orders right and left. And some of those EOs have real world financial consequences, like doubling the federal minimum wage to $15. You know, that's going to have real economic effect. And yet to be seen what this flurry of executive orders is going to do to the markets. So, but we'll find out. I noticed in looking at the weekly chart of the dollar that we potentially have a 5-wave price movement in our downtrend. And so all of this is 2020, that we've got this big dollar was up over 100 at the start of 2020, and now we're down here. And so this price movement has unfolded in a series of waves. And so Elliott wave theory, that's what it talks about, is how price moves in waves. One of the basic principles is that price tends to move in patterns of 5 waves and 3 waves. And so what we see here is potentially a 5-wave pattern, which might suggest that this downward movement is complete, and that we might expect a change in behavior, which of course in this case would mean a rally, at least a relief rally. So anyway, and I'm not a hardcore proponent of Elliott wave by any means, but I do find that this general principle has some value. When you look at enough charts, you'll recognize that price tends to move in patterns of 5 waves and 3 waves. But also not uncommon that it would, we could get that could be wave 6 and get a 7th wave down. I mean, there's no way to tell. But it is one of the ways to understand what price is doing. And we don't need that. Interest rates. This is another. We've got our persistent uptrend. Interest rates have gone into a sideways bump or consolidation, but clearly look, all of the moving averages are headed higher, including the 200-day moving average at this point. The primary trend in interest rates is up at this point. We've already got the Fed heads out talking about yield curve control. There's just not realistic to think that interest rates can rise significantly and the status quo can continue. and obviously the fact that they're already talking about managing interest rates. Anyway, it suggests that they know that they got a red light flashing on the 10-year yield there. Let's see the equity markets this week. We got the big gap up on the 20th with the inauguration. In S&P 500, price was not able to penetrate the top of this channel. And so we got a pullback. And then on Friday, I would call that this pink horizontal line, that's the break. I'd call that a breakout level. And so potentially that Friday move, that could be a test of the breakout level, assuming that Monday we get a move higher. And so we'll see what happens Monday. I'd also point out that if price can't move higher from there, price abhors a vacuum. And so that open gap could easily be filled if price doesn't maintain its upward movement next week. The Dow didn't get that's the 20th. So we didn't get the big gap up in the Dow. And we can see that this is mostly sideways action for about 2 weeks now, not making any progress at all. Price is getting squeezed into this triangle where it either has to break higher, break above this horizontal resistance and move higher, or break below the median line of this pitchfork. And as we can see, this median line is doing a good job of describing the price action. We see here how many times price has found support on the median line. And therefore, if price breaks below that median line, it carries some significance, or will carry some significance. Nasdaq continues to be more bullish than the other two equity indexes. We got the big gap on Inauguration Day, and the momentum was able to continue and push through the top of the price channel. And so on Friday, this is potentially a test of that breakout level. But again, we have to get follow through to the upside, or price is going to drop back into the channel. Oil continues its steady uptrend, although, quite overextended. The moving averages are quite overextended relative to one another. At some point, we'll get a reversion to the mean. There'll be some kind of pullback or correction in this move. Price could continue higher from there, but we've had several months of steady higher, so it's getting to the point where a pullback wouldn't be surprising. So we'll put it that way. And folks, that is all I got for you this week. I'm trying to stay under 20 minutes. I'm at 18:30, and so I'm calling it. Have a fantastic week, folks. I'll talk to you again soon.